Everyone's bullish until they're not.
But the real question isn't actually how to make money in an overall bull market. The real question is, how do you make money when the market is actually falling? Which stocks are rallying and how can you actually profit?
So we're going to show you 4 stocks that the hedge funds are all over at the moment.
We've done the research so you can download them below.
This podcast is for educational purposes only and is not intended to be financial product advice or any investment recommendation. Stay tuned for additional disclaimers at the end of the episode. So the reason we're looking at these stocks is because there's this 2026 market crash is the headlines everywhere. Now, first of all, there has been no market crash currently, right?
Mm-hmm.
But there seems to be this real fear setting in around the markets that the 2026 market crash, all based on pretty much this AI arms war, basically, between China and the US, that's going to drag valuations down across global markets.
Yeah.
Because everybody's so heavily invested in AI. Is it a realistic thing that we're looking at here?
Well, I think markets always overreact both ways. They overreact to the downside and to the upside.
Yeah.
Right now in software, for instance, we're seeing a massive overreaction to the downside. And I think that's overblown, and we're going to come on to a few stocks that we're looking at currently in terms of where this overreaction is.
Yeah.
But equally, things can overreact to the upside. However, markets like the path of least resistance to the upside in stocks. So you've got a bit more leeway there. And we'll probably come on to that in one of the stocks that we picked as well.
Okay, so if that does then happen, these are the stocks that could kind of protect us in this situation. If we are going to see this sort of crash, we've got 4 stocks here which probably be either least affected because of certain factors or not affected at all. Okay, so here's stock one. Stock one is Microsoft. Now, I have to say, 4 of these charts are here. The first one, fine, is going up and to the right.
Yep.
The other 3 seem like they're quite low down.
Apart from the last one.
And we'll get into it. But Microsoft, this is the, it's Microsoft.
Yeah.
You know, there's not too much in the way of what we can do to introduce it. But why?
Massive revenue still. And although the increase in capital expenditure for AI was about 89% year over year, does that warrant a valuation at the same price, if you like, price to earnings, as the COVID bottom?
Yeah.
Does it warrant the same valuation as the bottom during 2022 when interest rate expectations were going up?
Yeah.
In my view, no. A business is allowed to spend money. And even though right now the perceived return on invested capital might not be that great, it's Microsoft at the end of the day.
Yeah, but look at all of these companies, right? The return on invested capital for all of these companies around AI is pretty much zero at the moment because the capex is absolutely astronomical on what these companies are spending.
It is, yeah, but people are taking a 1-2 year view on these things. The view that should be taken on any revolutionary technology is decades plus. That's the way that I see things. And from a market mechanics perspective here with Microsoft, you got to think of Microsoft's size. What will fund managers, pension funds, etc., be thinking when they see a stock that is so cheap in terms of valuation now, and where they can sufficiently add enough capital to, if you can add $200 billion into a stock and you're a pension fund, you're going to want to be doing that. Now, what looks like a prized opportunity here? Well, something like Microsoft that has a $4 trillion valuation, something like that.
Google has been the outlier in terms of AI because it's full stack solution on AI, right? Is Microsoft similar situation to that? Because of its size, right? It has the ability to be full stack around AI if it spends what it needs to spend, like Google are doing.
I don't think so. No, I think every firm is paying the NVIDIA tax. That isn't Google, and that's where I see Google having the massive advantage in AI. They've got their own TPUs, which means that they don't need to outsource any compute to NVIDIA in terms of GPU use. So Google will have the marginal cost advantage massively. And also, Google were the ones that did most of the base research for AI. They just came to the game a little bit later, more sort of late last year with Gemini, with the new models and things like that. Microsoft, I think, though, they're still Microsoft. From a stock pickers and market mechanics perspective, capital will be allocated to the largest firms as part of passive rebalancing with, the S&P 500 index and things like that. And so it's almost like there's forced buyers in the stock as well. At that valuation, it looks super cheap.
Yeah.
So the second stock is Salesforce. They offer B2B firms a customer resource management tool, which is very, very well known. It's probably the most popular in the world, and pretty much every single corporate has it. So you get a lead in, and then all the way down to conversion, someone paying you. Probably Salesforce is the tool that the corporate uses to get you from that top end of the journey down to the bottom.
Talking about this chart, and this goes against the stuff that we've said before about, obviously you don't just buy everything that's going up and to the right, but this is not going up and to the right, it's going down and to the right.
Absolutely.
And it is, over the last 12 months, has been particularly shit in terms of its performance. So tell me why I'm investing in Salesforce when it's at its lowest point it's been in however long.
I look at this as an individual opportunity,
right, based
off of overblown perspectives on what AI's effect on software is going to be. I think there's going to be an absolute mammoth sort of revaluation of software stocks still. They're already down maybe 40%, 50%. Some of them are down even more. But you've got to really then go and say, okay, just because AI might affect these things, does it mean that you're really, really going to disrupt a company where that software is integrated into the entire chain?
See, this is what I don't understand about how software stocks have been so hit negatively by AI stocks. There is benefit for all software stocks with the integration of AI.
Exactly.
Surely.
But we're going to get onto an even dumber overreaction in a second.
Yeah.
But with Salesforce, especially, I completely agree. They've already started to.
So the integration of AI into Salesforce, and Salesforce being a CRM tool, right?
Yeah.
That can only lead to more efficiencies with companies.
Yeah.
Because that are using Salesforce. Maybe we talk about AI taking jobs, but maybe the reduced headcount, which is reduced costs.
That's a good thing. Exactly.
Yeah, exactly. That's what I'm talking about. I'm talking about it from a personal or economic standpoint. I'm talking about it from a Salesforce bottom line.
Yeah.
Right. So I just don't understand the overblown reaction to this. So this is exactly what we're saying, right? Is that actually the reaction to this is so overblown that actually AI is going to help these companies.
It doesn't make sense to me. Like, you can't just consider that there's a top in Salesforce just because AI has come in, which actually benefits them to a certain extent. We've already seen them cut a hell of a lot of jobs over the past year, which is, improving their operational expenditure. Now, the one caveat there is maybe what happens if the token cost actually starts to cost the same as an employee.
Yeah.
Which I'm sure they're modeling out and making sure that doesn't happen.
Yeah.
But it just seems so bizarre to me that people are so willing to just hit the sell button on some of these massive software stocks when you can't just build a brand new CRM like Salesforce out. It doesn't make any sense.
One of the key worries is the cost implication, is it? That to integrate a good AI model into such software, you either have to develop it yourself, which is massive cost, as we spoke about with CapEx on a lot of these AI companies anyway, or you need to integrate with a Gemini or whoever it may be, which is obviously the path that most of these companies will go down. They'll just integrate with Gemini or whatever. But then what's the cost to a company like Salesforce of integrating Gemini into their software?
I don't know, but I certainly know it doesn't warrant
if you're a complete 50% fall in stock prices.
Exactly. If you're basing the price of a stock over the next 5 years, why does that initial cost implication factor into that? It doesn't make sense to me.
Yeah.
I think it's a great time and a great price.
Okay, so stock number 3 is Caterpillar. Now, I suppose everybody knows of Caterpillar. There's the Caterpillar, they make boots, but they make huge machinery, right? And they're present in pretty much every building site in the world. But actually, that's not why we're talking about this, right? We're talking about the AI automation that they've brought in around a whole host of different things that they work on.
Look, there's so much to do with Caterpillar here, and I'll just break it down quickly. I own out of my portfolio. They're probably about 55% now of my entire portfolio. 55 to 60% changes roughly. That's how bullish I am on them. And it's mainly because...
the chart's ridiculous.
Yeah, but it's mainly if you look at the bottleneck in AI, infrastructure generally, energy, they're able to fulfill that bottleneck because what they're doing is they're crossing over sectors. So where you've got mining and things need to go into, chips, AI, data center build outs and things like that, they're covering that. When it comes to temporary power generation, jet turbines, and anything to do with power now, they're involved there. The heavy machinery, as we've discussed, to actually dig the foundations and dig anything else that you need to build anything to do with power stations, to do with data centers, they're providing the machinery. They own 16 or 17% of the entire heavy machinery market in the world, which is the most out of anyone.
And don't they also have tech on autonomous?
Yes, they do.
Autonomous mining, is it? Or autonomous?
Yeah, they've got 700 of those massive mining trucks.
Yeah.
That are able to literally just work autonomously.
Yeah.
So it is the true, real example of robotics.
Stock. Yeah, and a
robotics
crossover.
and AI in use now. And I think people tend to neglect them because it's not very sexy.
No, exactly.
It's mining trucks. But the most interesting thing about Caterpillar is all of the tech-enabled stuff that they have to go along with it.
Yeah.
Because these contracts are fully integrated across 20 years. So let's say you've got, a truck that's working autonomously. That truck can also send data to suggest, okay, does the engine need fixing at certain points?
Yeah.
What's the oil level? Do the tires need changing? All of these things, so you don't have to pay engineers to then go and look at them and waste time, increases productivity. But then you've also got Cat Connect, which is that, but it's kind of like a sort of subscription service across the length of the contract. But these are super long contracts. Mm-hmm. You can't just go, once you've got these machines integrated into your sites, you can't just then go and say, oh yeah, I'm going to go and use a competitor like...
Yeah, it's full integration.
JCB, I don't even think they're a true competitor.
Yeah.
And so it's completely integrated across the whole life cycle of a contract. And these are very, very sticky as well.
Yeah,
If you've used Caterpillar for 10 years, you're not really going to go and switch to another brand of machinery. Yeah. Probably because there aren't any to compete, which is fantastic.
But I think what's interesting about this, because this is completely different to the other two options, right?
Exactly.
So Microsoft and Salesforce were
value
plays, but software stocks, which we were saying the reaction's been overplayed.
Yeah.
This is actually something which is doing incredibly well, stock-wise, but is a pure crossover, which is just an example of a traditional, unsexy, construction-based stock, which is transferring itself and using the technology to its benefit. Now, the last one we ummed and ahed about. Yeah. Right? But this is CrowdStrike. What does CrowdStrike do?
They're a cybersecurity firm.
Right.
So they offer cybersecurity software. I had to think deeper about this over the weekend because there was a post that was released by Claude that said that they were bringing cybersecurity tools out. Now, I said, oh no, I don't really want to talk about this on here because that seems like the stock's actually really badly hit. Looking at it now, my view is that this actually benefits the stock because it increases further CrowdStrike's moat. I like using the term moat. If you don't know what a moat is, it's basically what protects the stock from any competitors.
I didn't know what a moat was until about Friday.
Until I started hammering it down your throat.
Yeah, exactly. And I've been in markets for 20 years, so if you don't know what a moat is, don't worry about it.
But the big issue with considering AI to be a disruptor here is it completely negates the actual expertise in what CrowdStrike does. Mm-hmm. And people are just selling the stock because, cybersecurity, CrowdStrike, they're a cybersecurity firm. Claude's going to be able to do that. It's completely bollocks, quite frankly.
Yeah.
There is so much expertise built in, so many trillions of different data points that they've got to be able to understand security flaws, to understand, where things can be exploited.
So this is another example of how can AI not benefit a company like this?
Exactly. Like, how is Claude? How are you? Okay, take this. I want to go and build cybersecurity tools.
Yeah.
Me. I've got zero experience in cybersecurity. Oh, Claude comes and tells me, oh, you can actually do it. Do you actually think I can do that? No. Just by typing in a couple of things?
Yeah.
No. Like, it's just
But then
not
is
feasible.
there not a side to this as well, that AI also makes breaches of cybersecurity more prevalent?
Which makes it more valuable for
Makes it more
CrowdStrike.
valuable, it just means that software needs to evolve, right?
Well, yeah, but you know what the interesting thing is that I really think that with all of this AI chat, where does the responsibility lie? Okay, with if something does go wrong, does it lie with the LLM? Does it lie with the company providing the AI, or does it lie with the person who integrated it into the company that is purchasing the system? Whereas if you've got, in CrowdStrike's case, an engineer or a team of engineers, you know where that responsibility lies. And I feel like for corporates, this is something that they're really going to have to try and come to terms with. There is no specific key person of responsibility when it comes to using AI tools a lot of the time.
Yeah.
If something hallucinates, who do you blame? Oh, it's just a risk we're going to take. Well, that's not going to be a good enough reason for the end customer at the end of the day, if data gets breached or something. So at least with CrowdStrike, you can say, okay, test it sufficiently.
Yeah.
Or when you're using a human engineer at CrowdStrike or cyber, test it sufficiently so that we have a key point of failure.
The view from an outsider on a lot of these software stocks is that, well, AI is going to ruin that.
Yeah.
And there's your reaction in the markets, right?
Yeah.
And it's like, well, the AI is coming in, meaning that this no longer works.
Yeah, but there's no specifics.
Yeah, exactly.
There's nothing specific.
But then the market crashes are usually like that. There are no specifics in market crashes.
Exactly.
It's overreaction always.
Exactly.
You know,
overreactions tend to be because stupid people like pressing the button too quickly.
There's a lot of them around.
Yes.
Okay, so if there is a crash, which we're not saying there is going to be, but we have 3 value plays where we've seen huge overreaction and 1 killer outperformance from Caterpillar. Let us know what you think. Let us know if we're talking rubbish. Like, subscribe, and we'll see you in the next episode. This podcast is for educational purposes only and is not intended to be financial, product advice, or any investment recommendation. It has been prepared without taking your objectives, financial situation, and needs into account. Any references to past performance and forecasts are not reliable indicators of future results. For more information, visit axi.com.